Free your mind from the conditioning of society and fly. Think like you are meant to. Ariel McAllister.
You have to force behaviors, and you have to force behaviors, and you have to force behaviors. And
Larry Fink has his sights on forcing behaviors, mandatory ESG or environmental, social, and governance standards. Every public company currently possesses an ESG score. That's used for comparison and validation. Regulators such as the SEC are forcing ESG requirements. And if you're a publicly traded company, it's important to think about your ESG score because it's going to harm your bottom line if you don't comply. Companies with good scores will have access to more loans, while other ones with bad scores will have less opportunity. This is being applied at an individual level as well. MasterCard's Do Black card is the first credit card with a carbon limit. They will be forcing behaviors, treating people like lab rats, creating a system of punishments and rewards, conditioning us.
Climate change can have a massive bearing on price stability and on financial stability. Today, the window is rapidly closing. And if we, all of us, including central bankers, don't do anything about it, we will be toasted, roasted, and grilled.
Lagarde chooses strong words. You see, she shares the same ideology as Fink. The people that meet at Davos, the richest and most powerful, have already determined what is important. ESG on its surface might sound good to you, but was there a transparent process of determining what is important? Was there a vote? No, the few decided. The banks, the big businesses, they want certain behaviors. And what other behaviors will be important in the future? There's a lot of criticism over China's social credit score, but the Western world is applying the same design to its people. It starts with ESG. Where will it end?
You now make a point of that's an investment criteria for you.
well, behaviors are going to have to change, and this is one thing we're asking companies. You have to force behaviors, and at BlackRock we are forcing behaviors. 54% of the incoming class are women. We added 4 more points in terms of diverse employment this year, and what we're doing internally is if you don't achieve these levels of impact, your compensation could be impacted. Okay,
we're doing the same.
And so
your compensation will be impacted. If you don't follow their rules, they're going to punish you and reward those that do.
It's just you have to force behaviors, and if you don't force behaviors, whether it's gender or race or just any way you want to say the composition of your team, you're going to be impacted. And that's not recruiting. It is development, as Ken said. And ultimately, it's still going to take time, but I am just as much shocked as Ken is that we have not seen more opportunities. And we're going to have to force change.
Today, some are boycotting companies that follow these requirements. People are pushing back. But what happens when it affects you and your family? By adhering to unwritten rules, you and your family will have more opportunities. Control of the people, not written by laws or democracy, but by the financial leaders. This system I'm describing has a tremendous amount of power, and it's irrelevant if you agree with ESG or not. What is relevant is the credit system they're creating.
Climate change affects inflation, and inflation is the beast that all central bankers, whether they wear a green jacket or not, want to tame and discipline. Number 2, because it affects our balance sheet. Whether it's a 3 trillion or a 7 trillion balance sheets, it is affected by climate change.
The financial system is being upgraded as we speak. A system that runs on decentralized or distributed technologies are more secure and efficient than legacy banking. This world of tokenization generates vast amounts of data, and all information is public and out in the open. BlackRock made their fortune with Aladdin. Aladdin was their analytics platform that has now evolved into an AI platform. Tokenization allows for unique opportunities like tokenizing intangibles such as carbon credits. It also allows fiat to have a burn rate.
The entire bond market is being transformed as we talk right now. I believe the next generation for markets, the next generation for securities will be tokenization of securities. We will, and if we could have that distributed ledger that we know every beneficial owner, every beneficial seller, we all have our code
Right.
of who's buying, who's selling, instantaneous settlement. And think about it, it changes the whole ecosystem.
You notice how he said a distributed or decentralized ledger? Crypto assets are just that, decentralized ledgers that allow tokenization. Sure, they're centralized systems that are trying to recreate the efficiencies that blockchain has to offer, but in order for there to be an internet of value, trustless mechanisms must bridge the gap. It's the difference between the intranet and the internet. Did you know that your data is being used for home loans and health insurance quotes? Data vampires are tracking and tracing your IP as well as your personal information. It's a very large industry and you're the product. And Cogni asked to sponsor this show. Their software is a platform that automatically contacts all data brokers and requests removal of your data. Sit back and relax as they submit hundreds of requests to remove your information from all data brokers automatically. Did you know the robocalls you get is because your data has been leaked? Some data brokers have even been charged with conspiracy to commit mail and wire fraud. Legally, there are laws to protect you, but you have to opt out. That is what Incogni does. They opt out for you. If you go to my link, incogni.com/Darren, you can save 50% off their annual plan. So incogni.com/Darren.
An important innovation was the advent of money in the form of ledger entries overseen by trusted intermediaries, which allowed new financial instruments that bridged both geographical distance and the timing gap between incurring costs and receiving payment. These were paper ledgers for hundreds of years, but when paper ledgers gave way to electronic record keeping, the gains were more dramatic still. We're arguing that we're on the cusp of a comparable leap in the development of the monetary and financial system as these earlier fundamental advances.
We are on the cusp of a new system, a system that allows logic and programmable money.
The blueprint that we've just outlined, that has central banks, it has commercial banks, it has regulated institutions that are already currently, part of the current system. Now, the actual consensus mechanism, if you like, the actual mechanism for effecting the transactions, I mean, that could be decentralized. But I think the actual, choice of technology, that will really have to be decided for that particular use case. It could be decentralized, like in a permission blockchain, but it doesn't have to be.
The BIS and the IMF are creating a tokenized platform, and you heard them, it could be decentralized. You see, especially with international transactions, why would you have a trusted database? They recreate the same problems by introducing centralized systems. For all countries to have a fair and level playing field, a trustless mechanism, i.e. a crypto asset, needs to sit at the heart of this system.
I mean, that could be decentralized.
This could have a decentralized consensus mechanism. SWIFT was originally a public neutral good that was corrupted by the USA. A crypto asset is a neutral public good. It's a public ledger that cannot be persuaded by any one government or person.
BlackRock shocked the financial world when it filed for the iShares Bitcoin Trust on June 15th, becoming the most prominent filer for a spot Bitcoin ETF after years of rejection of the strategy by the U.S. Securities and Exchange Commission. The surprise filing came on the heels of the SEC's lawsuit against Coinbase and Binance, making the timing and BlackRock's partnership with Coinbase in the filing even more odd. As the world's largest asset manager, BlackRock would immediately give legitimacy to the Bitcoin market in need of it. Between the SEC's crackdown and high-fee, imperfect Bitcoin ETFs currently on the market, an iShares spot Bitcoin ETF would be a welcome facelift.
The future of crypto has to do with the future of money. Bitcoin is crypto and crypto is Bitcoin. BlackRock pulling strings will lead to crypto being legitimized. Protocols that add value to the economy will be legitimized. This is just a stepping stone. The SEC and other U.S. regulators have been stalling. And according to Dawn Fitzpatrick from the Soros Fund, This is an opportunity for the incumbents, and that's exactly what's happening. The incumbents are swooping in.
Huge opportunity for the incumbent financial firms to actually take the lead.
During this downturn in crypto, incumbents have an opportunity.
A Bitcoin ETF that's not futures based, it's spot Bitcoin,
Right.
okay? And Gensler said, no way, that's not going to happen. But at the same time, they're bringing together some pretty good partners from a custody standpoint. They've got Bank of New York Mellon, they've got Coinbase,
Right.
they've got an agreement, a surveillance agreement with NASDAQ to help with the security aspect of it. So they're trying to show the SEC that they're putting all the safety provisions in place to give them the confidence, to give them that acceptance of their application. I think the big thing we know, as Gensler said, we're not going to do anything there unless we have the exchanges regulated, and Coinbase is not regulated.
The leaders in the U.S. are Coinbase and Ripple. They were the first to get attacked. Why? Because they will get clarity first. BlackRock isn't wasting their time. They plan on getting a spot Bitcoin ETF. This opens the door for the big players to allocate just 1% of their portfolio into the crypto world.
And I think what I've said as an institutional investor now is it's time to lay down the olive branches. It's clear now that the CEO of Coinbase, which has lost 70% of its market cap since the IPO, Gensler is razor clear about what he wants. He's basically saying, let's just take one asset that everybody knows. He's calling Bitcoin a security. He wants to regulate where you trade it like a broker-dealer exchange. And he has no flexibility. Now, one of two things should happen. If you're a shareholder or a board member of Coinbase, I'd swap leadership. I'd get a new person to run it and go back into the staff and say, we got to work this out.
O'Leary wants Brian Armstrong fired because he's an obstacle in the way. Brian Armstrong is pushing for the mass adoption of crypto assets to be commodities, while the SEC wants to regulate everything as securities. Yet, BlackRock is working with Coinbase for their spot Bitcoin ETF. So what will happen?
But that's my question. Do you think this is going to change their mind? I can't without the clear regulatory authority, and they're not getting a bill through Congress. So now he's just resorted to essentially suing everybody. He's trying to regulate essentially by filing complaints.
Yeah.
I don't see how this changes.
If anybody can get it done, would you bet against BlackRock?
No.
You know, they're the behemoth, right? They're
That's why I'm thinking. I still don't quite get.
Yeah.
How are they going to change his mind?
I mean, if they can partner with Coinbase and say, look, you agree to get regulated, what would that do to your business? Imagine institutional investments, just 1% allocation to Coinbase and what that would mean. We're talking about a lot of money.
Yeah.
So there are a lot of people like you that are saying, is this finally the time? Is it going to happen?
We're going to follow this very carefully, folks, because, again, they're not going to waste their time.
Yeah.
Trust me, BlackRock isn't, if they don't think they have some chance of doing something here.
They're going to force an outcome. Crypto markets will become legitimized. Regulations will pass.
Challenge, our question would be, what kind of hurdle, what kind of condition we want to impose on crypto if they want to enter into the house? And why would they want to enter into the house? Why would they just stay in the wilderness? Because they want to access the millions of customers, the millions of investors in the house. And if you don't comply with the regulatory rules, you won't be able to access such large number of mainstream investors and customers. So there is an incentive for crypto to get into the house. So if they have the incentive, let's think about what kind of hurdle we want to impose, what kind of condition we want to impose, and which room we should let them in.
Crypto is being regulated at the international front. Most countries have come up with regulatory bodies that have regulated crypto. Bo Li from the People's Bank of China and the IMF saying once crypto is regulated, it has immense opportunities.
At this global citizen event, we call for a global financial system that is fit for purpose. One that does not pit the West against the East, or the North against the South, or emitters against those who don't emit, or the developing against the developed. We want one that is fair, a financial system that is fair, that is transparent, and it is not too much to ask for a fair system.
Fair and transparent systems require a trustless ledger. The heart of the next financial system will involve crypto assets. You just heard them, transparent and fair. You can't have a fair ledger if it's centralized.
Right? Blockchain technology is one of the 4 pillars of the digital age, the ABCDs, as we call them. That's AI, blockchain technology, computer chips, and data. Those 4 things are transforming the way we store and exchange value. The same way that media was completely disrupted by the internet and the value of the biggest media assets went to new assets, the same thing's happening in financial services. It's a long process. It doesn't happen overnight. It happens over decades. But every stock, every bond, every currency, every commodity, every piece of art, every private business, every piece of real estate will eventually be a token on a blockchain, an entry on a ledger, permanent and immutable. We will have truth instead of trust, and we will save over $7 trillion a year. 6 to 8% of global GDP is wasted by the friction of the trust industry that's necessary when you have dual entry accounting. With triple entry accounting, which is what a blockchain is, we get rid of all of that friction. It's a beautiful future.
The Internet of Value will happen. Trustless ledgers play a critical role. However, let's get back to forcing behaviors. You see, fiat will still exist. There'll be tokens on a ledger. Every transaction will be watched and monitored by AI. Sanctioning can happen not only at a country level, but at an individual level. If you're not following what they say, then you could have your wallet blacklisted. If you don't have a plan, you become part of somebody else's plan. Terrence McKenna. Thanks, everyone. I hope you enjoyed the show. Please take a moment to like and subscribe. If you enjoy content like this, please consider joining my Patreon.